Looks like we're all good with the recording. Okay. Good morning, everyone. Today is May 19th. It's our group call, Sunday call. Like I said, Carson's out of town this morning, so it'll just be us on the call this morning. We'll go over the economic calendar, dollar, and the indices, and then we'll look at some trade submissions and then any questions we will cover as well. Good morning, Mauricio. I saw you just hopped in. All right, so let me go ahead and pull up my economic calendar here. And here we go. Okay. I'll make sure that's going. Good. Okay. John, good morning to you. All right, so starting off this week, Monday, no red folder or really medium impact news. It's just FOMC speakers, so not expecting a whole lot on Monday. This doesn't really tend to move the market in any sort of crazy way, but just be aware of the fact that we do have some speakers, and it's a Monday, which means you could see some sort of kind of consolidative seek and destroy action early at the beginning of the week. So you'll want to focus your attention here, likely toward the end of the week. Okay. Tuesday, same deal, nothing apart from the FOMC speakers. So same idea, Monday and Tuesday could both provide an initial consolidation part of the week. If you're thinking in terms of power three, like accumulation and then manipulation and distribution, if that's going to establish the weekly profile, then you would start to anticipate something like a Wednesday high of week or Wednesday low of week. Okay, depending on which way we're going to draw into. Wednesday, existing home sales at 10, crude oil inventories. That's just for if you're trading oil. It's not really something that we see affect the indices really, but and then of course FOMC minutes at 2 p.m. So again, when you have FOMC in the afternoon, we don't have the conference. It's just the minutes, so it's likely not going to be as crazy as when we have the conference. But you still want to focus your attention on the end of the day, because ahead of this high impact news event, you can have continued consolidation and seek and destroy conditions. The idea is to build liquidity on both ends of the market, above highs and below lows, so that FOMC could then come in with the high impact news, run out one side, and then distribute to the other direction. Okay. Thursday, unemployment claims as usual at 8:30. And then flash manufacturing PMI at 9:45, and flash services PMI as well, and then new home sales again. So Thursday should be a decent trading day. That might be the best opportunity in the week. And then following up with Friday, we have some durable goods orders, things like that at 8:30 that can provide a bit of volatility. And then of course, consumer sentiment at 10 is typically the big mover, and you can see manipulation occur within that. Okay, so you're looking for where does price move to, and if it moves in opposition of your draw on liquidity, then you're viewing that as manipulation to then go in the opposing direction and seek your draw on liquidity. So that's the economic calendar. Any questions here before we jump into the dollar? Looks like we're all good. So I'll take that off there, and then pull up the dollar here. Ranjan, with so many speakers, is it best to avoid Monday through Wednesday? Likely yes. Monday through the AM session and lunch hour on Wednesday is most likely to be consolidative action, because you have no high impact news events ahead of that, and you want to see some form of medium or high impact news event form manipulation in the week to then work in the opposing direction. So if you have no news on the calendar, the likelihood is that you're just going to have consolidative or seek and destroy conditions. So if you can still find opportunities in that, there will be trade opportunities, but for the highest probability opportunities, you'll want to focus your attention on the back end of the week. After 2 or 2:30 on Wednesday. So you don't want to be involved going into the FOMC minutes either. Okay, let's go ahead and jump into the dollar. Start on a monthly chart here. Okay, so with a monthly chart, initially just viewing that we did return back up into the monthly SIB here, so viewing that as a reclaimed fair value gap as for now. We had a bit of a failure swing here, and that we reached up toward the buy side above this high, which is initially our expected draw when indices were on their way working lower. But you can see as we've had this rally back to all-time highs on the indices over the past couple of weeks, dollar has begun to make its way back off toward the prior month's low. And so that remains the draw on liquidity as for now, April's low being sell-side liquidity below there. And when you drop down to a weekly chart, you can visualize that as a swing low here. And one last thing on the monthly as well I wanted to point out. We're looking at what's the current dealing range. For a dealing range, you need sell side and buy side to be purged. So down here, we ran out the sell side. Then above these highs, running the buy side. So this forms our dealing range here. And as long as we're above equilibrium of that dealing range, we're operating in a premium. And we expect the price to move from a premium back toward areas of discount. And so it makes sense to draw under the sell side and draw back toward a discount here, as long as the indices are going to continue working higher. Okay. On a weekly, you can see that we now did get closure through the low end of the weekly busy here, even though we were already showing a bearish sentiment in the fact that we did not remain in the upper portion of this imbalance. So even by here, we could start to anticipate a potential move lower. And that's what we are seeing so far, trading right down into the rejection block. And I would like to see if dollar can continue moving lower down into the sell side here and into the remaining portion of this imbalance that has yet to be redelivered. Okay, so initially still just looking for lower prices on the dollar. And then as we drop to the daily chart, you can see how on Friday we reached right up into the consequent encroachment, the midpoint of the SIBI right here. That's a sell side imbalance, buy side inefficiency. You only had sell side delivered here, and by trading back up into it, you're re-delivering the sell side. There's still a portion of it that could be traded into, but if we're really looking for lower prices, it's preferred that we don't spend a whole great deal of time in the upper portion of the imbalance. And so this is fantastic that we traded right up into the midpoint and then went back and closed below it. That's still showing bearish sentiment, and that leans toward the likelihood of price continuing to gravitate lower down into this low and this low below here. Okay. If you do see a candle body go and close back above this imbalance, that's when we could start looking for a deeper retracement into the range. But until you see that, the expectation should be lower prices. Okay. So that's what I'm looking at there on the dollar. Any questions here? All good. Okay, I'll just say one more thing too. Just like we talked about in the morning chart and chat on Friday, and a bit in the morning live stream as well. When you trade up into an imbalance like this, if you're expecting prices to draw lower and you're looking to trade intraday, you want to see displacement away from this intraday to start showing an indication that we're going to draw lower. So if you go down into your lower time frames, I mean, Friday really wasn't the cleanest trading day on the indices just because of the lack of news. But you can see that as we touch that consequent encroachment, no candle bodies closing above, and we do create a SIBI away from it. So that's a good indication that we can continue drawing lower. And now that we have imbalances within here, I'd like to see if dollar makes an effort to climb up into these imbalances to continue drawing lower, down toward this low and sell side below here. Does that make sense? Good stuff. Good. Then I'll go ahead and move to the indices from here. ES and NASDAQ. Not really a whole lot to cover here. since what we touched on last week, we've been in a bit of a consolidation toward the back end of last week. But if you look on the monthly, we're now trading back at all-time highs. We did trade away from this SIBI that we traded in, or BISI, excuse me, that we traded into down here. Buy side imbalance, sell side inefficiency. We re-delivered the sell side with April's candle, trading all the way down to the low end, and now moving back away from it. So we're in the seasonal tendency of May to November, where you expect the distribution typically of the yearly range. And so if we're going to continue to expand higher on the indices, then I'd like to see if throughout the remaining 12 or 13 days of the month here, if we do make an effort to expand and close above April's high. That would be most ideal. Okay. Dropping down to the weekly chart, you can see that upon last week's closure, we did create a new BISI down here. So if we're failing to see continued displacement on time frames lower than the weekly, so your daily and your 4 hour, if we're failing to see continued displacement to the upside, that could tilt the hand toward price reaching back down into this imbalance down here. But initially, I'd like to see and focus my attention on just higher prices and see if there's a willingness to leave this gap open and continue to trade higher, reach through the previous week's high and just continuing to expand up. And at this point, you'll have to start using intraday projections based on your intraday price action to identify price targets, since we no longer have any sort of liquidity or imbalances or anything resting above price apart from the high that was created last week. Okay. On our daily chart, you can see that on Friday we dropped right back down into this imbalance here. We did end up closing above it, and we never even reached down to the consequent encroachment. So still showing bullishness in that respect. We haven't gotten a candle close yet above the all-time highs, which makes sense that we're seeing this consolidation as a result of that. So no continued expansion yet, but I do want to see in this coming week if there's an effort to reach back above this high. Okay. Any questions here on ES? Again, the same thing you're watching for, just like in opposition to the dollar. It'd be preferential for price to stay in the upper portion of this imbalance here. And then when price trades into it, as it did here on Friday, you're looking for price to then go and displace away from it. So if I drop down to an hourly, kick that off, you can see that we did create an hourly BISI here. Okay. So I'm not really going to be focused on overnight or London session action, but I'd be interested in seeing if this imbalance here could be utilized to trade higher up into a premium of this range. Okay. Any questions here on ES? Let me know it in the chat with a thumbs up or yes if we're all good here. Move to the dollar, or NASDAQ, excuse me. Aiden, thank you. Thank you, Stuart. Thank you, Kate. Thank you, Terry. All right, cool. We'll move over to NASDAQ now. Same idea as ES, really. Thank you, Mark. Appreciate it. Same idea as ES. We drop down into the monthly BISI right here, buy side imbalance, sell side inefficiency. We re-delivered the sell side with April's candle, traded all the way down to the low end, but you can see these candle bodies here with April and May are remaining inside the range of that imbalance there. And then we do trade back up to all-time highs being March's high here. So just like I was talking about on ES, most ideal scenario would be to see continued expansion away, where you do see May's candle close above April's candle. That would be most ideal. It's not necessary in order to see price continue expanding higher, but the most ideal scenario for an obvious expansion move would be to see that closure above April's high. Okay. Weekly chart, same idea. You're watching on your daily and 4 hour. Is there an effort to continue expanding higher and reaching toward this prior week's high? If there's not, then you have imbalance below in the form of a BISI that price could return into. So just being aware of that, especially given the fact that we have not had closure above the high yet. And then dropping into a daily, same idea. We did trade just shy of the consequent encroachment here. on NASDAQ and then closed right up at the upper portion of it. So that's still good for bullish sentiment. And you want to just see on your lower time frames now, your 4 hour and your 1 hour, is there an effort to displace higher and gravitate back up toward this high? It is possible that in the early part of the week, or even with the FOMC move, you could see a low run out here. That would not change my bias in terms of being bullish. We're at all-time highs. You want to focus your attention on long setups when trading at all-time highs, because you can see spooling action occur and you don't want to be on the wrong side of that. Until there are several instances of higher time frame bullish frameworks failing, I want to continue focusing my attention on long setups. There will be short opportunities within intraday, but for the highest probability opportunities, it's going to be the long setups. And so my general approach is I just avoid the short setups entirely. In Friday's stream, we talked about and tape read a short opportunity down into the sell side, but just because there's an opportunity doesn't mean it needs to be traded. We want to focus our attention on the highest probability setups. Any questions here on NASDAQ? Aiden, all good. Mark, I see you typing. Essence, see you typing. Terry, all good. Mark, great. John, thank you. Essence, let me know if you have a question or something. I saw you type in there as well. Stuart, Jagreet, perfect. Okay. Is there a way to have participated in a swing trade from April's end to the all-time highs? From April's end. Yeah, I mean, if you're a really long-term trader and you are anticipating for this to be a manipulation move for price to draw higher, then there are certainly opportunities within here. I mean, if you just look at where we traded down to, we re-delivered the sell side right here, just on that last imbalance on the daily, which we drew down into here. And then you'd just be looking for an effort to displace higher away from here and show some sort of change in state of delivery where you can start to engage this. So it may not be on the daily here, but let me just go down to an 8-hour chart. And so we're trading into the monthly, or the monthly being down into here. So I would want to see some displacement away from that on a weekly or a daily chart, ideally. But if you need to go a little bit lower, you can do so. So the first displacement that we get away from it on the daily would be right here. Okay, so when this candle closes, you now have a BISI right in there. So then I'm looking for how does price draw back into that and then trade away from it. So this is what we can look at initially right there. And then if you drop down even lower, down to an 8-hour, you can see I have a larger imbalance within here, which we do trade back into. And that is after we purged the lows here and then had a shift in market structure above this swing high right there. So this would be your 2022 model long to start looking for higher prices. And you're looking at this as a market maker buy model. So original consolidation in here, your smart money reversal is going to be down here. And then this could be like your low risk buy and reaccumulation. And then distributing up to the highs. So this in here could be your 2022 model. I think we had news here, so it would have been challenging to be a participant ahead of that. But if you were looking to swing trade this with a bit wider of a risk, this is a setup that you could take. So you'd be looking to be a buyer somewhere down in here initially with a stop loss down below the lows. And the way that I would frame it to reduce the stop is I would do the same cycle over again. So I just wait for price to trade into here, displace away from it on a lower time frame, and then find a buying opportunity within here. So let's look at 30-minute. Okay, and price doesn't necessarily need to draw back into an imbalance in order to take a trade. You could take it just on the creation of the imbalance. So you could even look at this as your first trade opportunity down in here against the order block right here. So we draw back into that 8 hour, displace away from it. On this candle's close, we've now created a BISU, so we're showing that there's an effort to continue working toward higher prices. These down close right here represent the bullish order block, which we trade into right there. So that can be your long entry with a stop under the low down here. And then your initial objective would be looking at this range and identifying where premium of the range is, and then holding up toward a premium of the range with this as a terminus. And in this case, it requires sitting through a significant retracement right here. If this entry weren't taken, then of course you're returning to the same imbalance again. So that's a reclaimed BISU right there. And you can do the same thing within here and just find a setup within here. So another swing opportunity here would be right there on the immediate rebalance, with a stop loss down below here, or really preferably down below here, but you should be safe below here. So then you can start framing it like this. Let's say you get a buy, let's say you don't get the perfect entry. So maybe you get in right around there and cover below here with your stop. And then you can reach for the highs up here. And you're taking partials above these highs and above each of these swing highs. That's how I would frame it. And it's good to wait for the beginning of May in this scenario too, because you're thinking about power of 3 and how we could initially have manipulation at the start of the month. And so if you look, instead of taking something right at the end of April, you can wait till May begins, which is right here, May 1st. And there's your opening right here as we get into midnight. And so if you look at the midnight open right there, you can now see that initial manipulation of the month. So everything below here is manipulation to then expand higher. And so as long as you're framing your trade opportunity close to or below this opening price, then that's a really ideal entry. So this would be a close proximity entry by entering there with a stop down below here, just below the candle bodies. For immediate rebalance, what would be the entry? An immediate rebalance entry is entering right at the high of the candle. So like right here for an immediate rebalance, you would enter at this candle's high. As price drops right back down into it, that's where you hit the entry. Okay. Any other questions here on indices or anything else? If not, I'll take a look at any trade submissions that we have. That's basically the model that I use for swings. I wait for price to trade into a higher time frame imbalance, like as it did here, trading into the monthly, and then I just wait for a lower time frame to displace away from it, and then when price draws back into the new imbalance, that's when I can frame the setup with a lower risk. This could already be the trade right there, or on the close of this candle, but you have to cover this low, which is fine if you size your position for that, but that's a pretty significant stop loss, and it can be reduced by finding an opportunity after price returns into the imbalance. So I think our entry was somewhere around in here, and then at that point you can just cover the low. And so your stop goes from almost 400 handles to 150, which is much more manageable. And remember, the number of the stop loss is not what's important. What's important is sizing your position to respect that. So if you can't trade a mini with 154 handle risk, which is about just over $3,000 worth of risk, then if you trade one micro instead, that's $300. So you just size your position to be appropriate to the risk that you have to take on in terms of the stop loss. Remember, the stop loss comes first, not the position size. Okay, looks like we're all good here. I don't see any other questions, so if you do have any, feel free to throw them in the chat as you think of them. But otherwise, I'm going to pull up the trade submissions. I think I just have one here from Aiden, so I'll go ahead and cover that. Okay. And y'all, remember these are up every week, so if you have a trade that you want to get reviewed, if you have a question about something you did, I mean, we learn, everyone's going to learn the most from opportunities where a loss was taken, so try to be open to sharing these things. That's where the majority of trading lessons come from. You can learn a lot more from a losing trade than a winning trade, but if you have a winning trade, share it in here as well if you want to get some feedback on it. But do take advantage of this because it's a good opportunity to have your model looked at and get feedback from others and see where you can potentially improve. Okay. Here's Aiden's submission here. So concepts used, change in state delivery, a breaker, emergent fair value apps, and you were trading a market maker buy model with the NASDAQ June contract. Time frame, 15-minute framework, 1-minute execution. It took 55 minutes, traded 3 contracts. Time of day, entered 4:09, exited at 5:04. Okay, nice. And Asia lows were taken. Drawn liquidity, 15-minute equal highs. Resting inside the 15-minute city. Took 1 partial and moved to break even. It looks like just a little bit before you ended up exiting the trade. In a bullish bias, so you're going long in here. Okay. Emotions before entry as price moved away from my initial entry point, which was at the first stage reaccumulation, the first breaker. I did not want to miss out on this move as I was sure the draw being the equal highs inside the 15-minute city. I entered upon breaking above the second breaker with 2 contracts. After entry, you're annoyed that once price broke above the second breaker, price decided to then give your initial entry at the first stage reaccumulation at the first breaker. At this point, my entire being was screaming at me to get out of the trade, but oddly enough, I was subconsciously confident with the fact my stop was placed perfectly. 3/4 of the first breaker deep. Okay. And thought to myself, I'd just take another one to the chin if it's another loss. Yeah, that's fine. Remember, when you put a trade on, you need to fully accept the risk of that trade when you put it on. After you take the entry, it's not up to you anymore at that point. You've done the work in doing the analysis and determining where the draw is and where price is and what's the framework to take price from your entry to your draw. And of course, you can manage the trade along the way. But as soon as you click that buy or sell button, you need to have accepted the risk of the trade. Okay, whatever risk you've taken on that, you have to be risking an amount that you are okay with losing. Emotions during pyramid. After price coming one tick of my stop loss sweeping the initial lows, I was targeting to get in. I added one more contract to my trade subconsciously without thinking. Still out of every fiber of my being telling me I would lose another trade again because I did not know what I was doing. Okay, so it sounds like you're coming off of a couple of losses like you had talked about last week. So it sounds like you're dealing with that mentally here. Emotions after the partial. As price was closing in near my partial, it made two attempts to take it, but created 3 equal highs instead. I was confident that I was at least going to get my partial filled if I was going to get stomped out during the 450 macro. And then after closing, felt relieved that I was out of the trade, but at the same time, I did not feel as happy as I thought I would. Felt extremely weird about this trade as it was an experience I never felt before. Let's take a look. Okay. So it looks like, let's see, where was your first entry? This, I guess, was your partial, or your pyramid that you took in here. And your first entry was somewhere up in here. And then you had to sit through this initial retracement down at the stops. Okay. Okay, that's the higher time frame view of things. So looking at this as like a OTE or a 2022 model, returning back into this range after displacing away from here, and then seeking the buy side. So I like the framework there. Yeah, just a couple things regarding the entry. When you're taking your entry, you're fully accepting that risk wherever you place your stop loss. So that's important initially. If you feel like you're chasing an entry, many times it's better to just wait and be okay with the trade going without you. This is going to appear over and over again, as I'm sure you've seen in your studying and your testing. And so your better opportunities are going to come when you wait for that entry that you'd like. If the difference between waiting for the entry and taking a higher entry is that if you miss this entry down in here, then you can frame a new trade opportunity like in here to reach for the highs. But if you're buying up in here without this entry ever happening, then you are potentially just chasing price higher. You can see that we're getting right into 4 here. I guess you could view this as a mitigation up here, but I wouldn't really even view that as a breaker because it's a bit extended away from it. And then remember your best runs are always going to occur after a run on stops. And so your higher probability entry here and your better trade entry would be waiting for a run on stops. It's totally fine to take your entry up here and to pyramid into it down here, but just be cautious of the fact that you're respecting your risk in doing that. Just because there is an opportunity to pyramid in here doesn't mean that you have to, and doesn't mean that you should if it extends beyond your initial risk either. Because now, if you've taken an entry here and we draw back down toward your stop loss, adding more in here is just adding more risk to the trade if you haven't already accounted for that. Okay, so whatever your maximum risk is on the trade needs to be accounted for before you're taking this entry and before you're taking a pyramid. So you're thinking about if it makes sense to even have a pyramid in there. Because you don't want to say, okay, let's say my max risk is, I don't know, $500, and you have $500 risk on this trade already. If you're pyramiding into it here just because it looks good or like you can reduce your average cost on the trade, that's not an appropriate decision because you're adding more risk onto the trade, and that's going to put a loss now in a greater losing position. And the framework of the trade hasn't changed by providing a new opportunity here. And so adding into the trade right there would just be like taking double risk or 1.5 times risk on the initial trade. So just make sure, and I didn't see if you included it in here, so you may have already been accounting for it, but just make sure if you are pyramiding into a trade, you already have that risk accounted for within your max risk, and that you're not pyramiding it in and extending your risk beyond what it should be. But I like that you were confident and stuck with it and allowed for price to find its way up toward there. Last thing on the partials is just be okay with booking it in close proximity. If you're seeing something like this and you could get into a period of extended consolidation, two ticks or so or one handle there isn't going to be much of a difference maker. And it's fine to, I know it's easy to get wrapped up into a point emotionally of like, I really want my limit order to hit, but is it going to make that much difference to you if you just take it off right there? It's going to clear your head, and it's going to allow you to focus on the remainder of the trade from a more from a greater point of emotional equilibrium. You're going to be able to manage the rest of your trade better and be able to take it all the way up into your buy side draw there without worrying about retracements occurring throughout here and not having booked a partial there yet. Let me see your commentary here. Yeah, so just a couple things to account for there, Aiden, but I'm glad that you were able to be confident in your trade here and focus your attention on just allowing price to work toward that draw on liquidity. And it's good. You're in drawdown recovery right now, it sounds like, and you're doing the right things by just taking it nice and slow. John, is the change in state of delivery really the place where it is depicted on the chart? Let me see. Yeah, it could be. I mean, if you're looking at this on a 1 minute time frame, you're viewing that as a bullish order block there. We traded into an imbalance, displaced away from it, and returned back into a discount of the range and against the order block. So yeah, it would be. If you're viewing this on a different time frame, like a 2 minute chart, you would likely see this as a series of down closed candles within here. And then you could see that as price runs through that, that could be your change of state of delivery there, and then you're viewing this as a return back to discount of the range. Clear would be the 15-minute. Oh, it didn't annotate it. Okay. Ron John, I don't use less than M5. Yeah, that's fine. Whatever, you can trade off of any time frame. So whatever you use is fine. Most important is that you're in line with the draw on liquidity and have the correct narrative. Okay, I'll take a look at your comment here too, Aiden. Further expanding slightly on this odd experience during the trade, I still can't understand why I strongly felt or thought that I would be losing another trade, which I believed could not go wrong. One reason, yeah, this is an important thing in your thinking too, is you want to go into a trade with confidence and an understanding that you're likely on the right side of order flow. That's why you're taking the trade in the first place. If you're not confident you're on the right side of order flow, then you're just gambling. So that's fine in thinking that way, but you have to be open always to the idea that we can be wrong and that there's nothing wrong with being wrong. We're going to be wrong sometimes, and that's why we're using appropriate risk management and accepting the risk on any trade that we take. So just a point to touch on there for everyone. One reason I had reason to believe my trade was on side was due to the time of where price was at. I guess it goes to show trading's more about you as a person rather than technicals and time, of course. Yeah, remember, it's always time before price. So just because you're seeing a breaker form or a fair value gap or something like that isn't meaningful unless it's occurring within a specific time that fits the narrative for price to work toward your expected draw on liquidity. And you got the details here on your trade. So very nice. Good. When you get to a point where you do understand the technicals pretty well, and even before this really, it's always the case, but it is absolutely about you and your mental side of things. our biggest challenge in trading is always going to be ourselves. We're dealing with our emotions. We're not robotic, and you want to make trading as easy as you can for yourself by doing the things that are going to help you mitigate emotions throughout the process. So just like you're trying to look for opportunities where you can mitigate risk or improve your position on a trade, you want to be thinking about your mental state as well. Just like we always talk about your financial capital and your mental capital, you're looking for ways that you can preserve your mental capital even throughout the trade. And so that's why we do things like take partials and use a stop loss always, because these are things that are going to put you at ease in your trading, or at as close to at ease as you can be. And it takes time to develop your own mental understanding and get to a place where you're comfortable in the markets. And that's why it's important to go through the process of paper trading and backtesting and doing all that good habit building stuff before you ever get into a live market. But thanks for sharing this, Aiden. I appreciate your vulnerability as always. It's good insights for everyone. So thank you. I think that's it for trade reviews. It looks like. If you do have any next week, I'll open up another trade submission here. So feel free to throw them in there for next week. And I think that's pretty much it. I don't really have much else to touch on for today unless there's any other questions. If you do have any other questions, feel free to throw them in the chat. I'm happy to go over them. Otherwise, I'll just give a couple notes here about the week ahead. Make sure you're thinking about that economic calendar with Monday through Wednesday. We also have tomorrow, we'll have our next session of the 2022 study group. Please see the adapted schedule. We had to change up a couple things to make sure we're covering all the episodes. This coming week we'll be talking about market structure. It's episode 12, Advanced Study of Market Structure. That's at 8 p.m. Eastern tomorrow. We'll have our 2022 call for that. Hope to see you all there. That's it's going really well so far. I'm having fun going back over that material again myself, and I hope you all are getting some insights and learning something from it. Kate, let me look at your comment. On Friday, could we have had a bearish bias due to the following? We tagged all-time highs but couldn't displace over. Thursday's close was toward the low of the daily candle, so the next day was more likely to take prior day low or be bearish. Classic expansion week with high being made on Thursday and weekly objective already reached. We are likely to fall back into the range instead of going higher. We had change in state of delivery once price traded below 9 a.m. hourly candle on Thursday, and we had a daily BSC below to act as a draw. Yeah, absolutely. All of those things pointed toward it. You already reached the higher time frame draw. You've had a large expansion. The days after that can work into consolidation and come back against opposing liquidity. So all the things were sorted to that, and just like we talked about in the morning stream, we're able to walk a trade down into the sell side. So the opportunities are there, but when you're trading at or near all-time highs, the highest probability opportunities are still going to be toward the long side, because there's no way of telling exactly how far the market can extend, and there are scenarios where it will just continue to run and run and run throughout the entirety of the week up until Friday's close. And so just keeping that in mind, if you really want to focus your attention on the highest probability opportunities, then we just avoid those short setups when we're trading near or at all-time highs. But yeah, there were definitely pointers that indicated that we could draw back into the lows, and there were setups to take advantage of that. So those are all good notes. Appreciate that, Kate. Okay, anything else? Any questions, anyone? Otherwise, I think we are pretty much set here for Sunday. I'll give the rest of the day back to you. Aiden, all good? Perfect. Okay, then we'll go ahead and close it out here. I'll see you all for the 2022 call tomorrow evening. And let's see, any last thoughts? Thanks, though. Thanks, Ron John. Thanks, Terry. Thanks, Jagreet. Appreciate it. Okay, then I'll go ahead and close it up here. Be safe, be responsible as we begin the week. Keep your mind on that economic calendar and waiting for those higher probability setups that are likely to occur toward the back end of the week, given that we don't have a lot of news in the front end. So just be cautious in that respect, and I'll see you all in Discord. If you have any questions, feel free to send me a message. And otherwise, I'll talk to you soon. Be safe, everyone.